I feel like I've said this phrase before, this time is different, but in different contexts. We're going to talk about rate cuts. Is it going to be the same or is it going to be genuinely different? So I need to talk about my opinion on it. I'm going to get two other opinions, bullish and bearish, for obvious reasons, in terms of what could be good and what could be bad. Realistically, we all know this. We need the rate cuts to happen. But the data tells us that we're going to be in for a bit of a rough ride. If you're new, it'll be absolutely awesome if you press that subscribe button and leave a like on the video. But what I really want is a comment. I want you to tell me, are you bullish or bearish relating to the rate cuts? There is a comment block on though. They won't be appearing until I manually approve them to stop Z scammers. Now I know you're probably wondering, why was there some Bitcoin on the top left of the thumbnail? Well, I'm starting something a little bit different, a little bit new. Get rich slow. Dollar cost average challenge. I'm going to be putting some money into a Bitcoin account. I'm going to be tracking it on my Patreon. I'm going to be putting it on here as well. If you want to see me managing it in real time, it's on Patreon. If you want to see what happens in terms of every video release and when I talk about it, it'll be on the videos, right? However, the reason why I'm doing it, and I know if you watch my last video, you'll know this. I put something daft on ChatGPT. What would happen if I put $1,000 in Bitcoin until 2030, right? These are kind of the numbers it kind of spat out. And ultimately, in my head, it was like, should we try and beat it? Okay. So we're going to do that. So if you want to follow on, crack on. If you want to just see the progress in 6 months to a year to 2 years to 2020, whatever, I don't know. We'll see how it goes, right? And to follow on from that, I saw this tweet as well and I thought, oh, that's brilliant. These are kind of the percentage gains that you get versus the S&P and versus the TQQQ, which is technically a leverage platform. However, you can see in terms of how much monies you can gain, potential gains over the course of time, and dollar cost averaging works essentially because you can't time the market, you can't get tops and bottoms, but dollar cost averaging could kind of somewhat work. But I put $1,000 in basically, at $53,000, and yeah, we've had a little bounce. Lovely. Before I go into rate cuts, we have CPI tomorrow. The consensus is 2.6%. It will probably rattle the market. This is, I know, sorry, probably the most important one we're going to have in a while due to the fact of what could be happening on the 18th of September. Where we are talking about, for the first time in a very long time, rate cuts, which gives us onto this topic. We need to talk about it because this could create two things, volatility and also liquidity. It could spark economic growth in the markets. It's not going to happen overnight. It's going to take a long, long time for the interest rate to drop to certain levels, which we are going to come on to now. This is the interest rate chart. Okay, projection is of interest. We're not going to talk too much about that, but the reality is we're at this 5.5% rate, and we have been since July 26th of July. Sorry, I forgot the words out. However, that is all going to change, and we're going to slowly go down. Whether we hit the levels of 2%, 1%. I very much doubt we're going to go down to the 0.25% again. However, that being said, but we'll come on to do two different base cases in terms of two people and myself. However, let's talk about the obvious. This could get volatile, and the chances at the moment of a 50% base rate cut and or either and probably more likely 25 base point is probably going to be that. So there are two options. I think it will all kind of weirdly swing on two things. You've got one, CPI tomorrow, and then you'll have another initial jobless claims report coming out as well, which kind of could be the basis of recession, people panicking. So we'll see how things go there. However, I do think it's going to be 25 base points. I think it's going to be stupid to do it. The plot overall is roughly, as far as I know, this is loose by the way, don't just quote me, roughly 400 basis points over the course of the next 12 months, which would indicate a 4% roughly interest rate drop, which would give us a base rate of roughly 1.5% technically. But that is, as I say, loose. That is as of today. other economic elements could make that change. Now, time to scare the living shite out of you. Sorry. I saw this tweet and I thought this is brilliant. Really good account, highly recommended in my opinion, a lot of data. Now, using the same time frame overlaid with the past rate cuts, in terms of the past like proper rate cuts, by the way, this is kind of what we get. Now, for obvious reasons, is this going to be different? We really don't know, right? That's the ultimate thing. But this is telling us what has happened in the past. The 4 cutting cycles match the same data that we're seeing currently. Unemployment rate going up. The 10-year yield, inversions, all that kind of stuff is all doing the same tickety-boo stuff, right? We cannot compare Bitcoin. We cannot compare crypto because this is using overlays from before that happened, funny enough. And the sentiment from the bulls is that rate cuts are suitable from the market. This is true in the long run. Yes, it does help. It stimulates growth, borrowing, all that kind of stuff, right? However, there was an average 13-month sell-off. Hence the thumbnail. Hence this image looking like that. So we have to be very, very open-minded to the fact that, well, we may squirt up and then squirt down. It's a big tweet, this. It's got 1 million views. I know it's a very much off the topic, a bit out of left field. And I think people need to be aware of the reality here that it may not all be good. However, we'll look at other situations as well in a second. Let's talk about the crypto side of it. Let's talk about the altcoin BTC pairs via Ben Cohen. Rate cuts. The last time that we had this, i.e. the little rate cut in July 2019, this is the only date we can realistically go on, is that a big capitulation happened regarding the BTC / altcoins, right? Which makes sense. Liquidity is going to be kind of dropped somewhere, and usually with crypto, it's found there first because it's a 24/7 market, right? Funny enough. Now, with that, in reality, I've got a little counter argument against this in a way, but I do think that we are going to get volatility. I think most of us can agree on that. I think it's going to spook the market in certain ways. Now, going back to the previous point, if we're going to get an upshoot first, probably Bitcoin's going to be the one that'll move. That may well then lead to that data of the BTC pairs looking really bad. And that could be the fun part, right? Realistically for opportunity. So we've got to look at that as an open mind. But this is the thing. When we go into my view, I'm going to showcase something very obvious here. This is new data for a lot of people with crypto, right? We may not react the exact same, which could be good, could be bad. We might dump and the S&P might pump. The Nasdaq might do well and we might just do nothing. We don't know what's going to happen. This is like realistically new for us. So we've got to see how it goes. I'm going to give you my view. My view is interesting. I know. I'm going to say it anyways, right? When we go to the maximum, we can see rate hikes, rate cuts, rate hikes. You get the idea, right? We had a one during COVID, right? But I want to tell you something that's somewhat interesting, right? A lot of these time periods over the previous years, whatever it may be, happen in certain situations due to certain things. The one thing that is kind of apparent here, the one that we're going through right now, now I've not checked the data for all of this for obvious reasons. There's an election happening. That could be the thing that makes it a little bit different, right? So what do I mean by this? Well, Ash, in the previous market, when we look at this one, there wasn't an election here. There was an election here, right? In November 2020 during COVID. And it all kind of was crazy, right? Rate cut happened before then. Now, when you think about it that way, that obviously simulated a massive drop. And we can talk about the 2019 factor with obviously Ben's point and how liquidity was kind of sapped. But when we talk about it in the obvious sense, well, there was an election that year, it was the following year. And if we are talking about the first point where we could be getting a 19-month sell-off, a 13-month sell-off, yeah, cool. But there was no election, right? In a couple of those years and that time periods. The one thing we need to talk about is anyone going into an election, whether you are Republican or Democrat, whatever, who cares? I don't. I'm in the UK. I kind of do in a way, but the reality is here, they don't want to go into that when the markets are absolutely bleeding and blood and thunder, right? Let's be honest here. So it's going to be very interesting to see how they step onto it with probably a 25 base point run. So then that gives you an idea. For obvious reasons, if you're looking at the obvious, if we're going to kind of annotate this in a real simple, horrible way, when we talk about, well, what actually happened, well, during COVID, we had this, what happened here? And then the markets did a massive V-shaped recovery into a massive bull market, and it ended roughly November of 2021 for obviously everything pretty much. And then we obviously pulled back. If you look at crypto, it kind of looked like this, and it kind of went. So it makes you wonder how prices are going to react, but the time frames are a little bit off due to the election, in my opinion. The other opinion I do have, which is a little bit controversial, is run for safety, Bitcoin. Institutional investment. Banks going under in January of 2023 created a bit of a wave for the whole catalyst to kind of move and get a bit of interest. And then we've started to see the rollout of institutional investments, such as the ETFs. But you're probably wondering, Ash, the ETF volume's shit at the minute. And you're not wrong, boys and girls. Let me just press a refresh button on this because I'm so unprofessional. I didn't get it ready. There you go. The institutional investments have gone on holiday. They've forgotten what to do, which is fine. But it makes you wonder, what are they waiting for? I think they're waiting for CPI. I think they're waiting for initial jobless claims. I think they're waiting for more data. And I think they're waiting for the FOMC to really tell us what's going to happen. It makes sense. Why would you not wait and just relax, chill out for a bit? Because it is holiday season. And we know November is a good month for the markets. We know that October is a good month for the markets. We also know that September is absolutely dire. So why not just wait until Q4 when we've got a bit more of a run-in, and historically, liquidity tends to return to the market. Kind of makes sense. By the way, if you want some of my more crazy, wacky thoughts and my opinions on the market, check out Patreon. You can join for free. It's a free trial too. And the Discord's pretty decent as well. Let's get on to Bitcoin. Been talking about two levels for a while. As I say, if you're in my Patreon, you'll know the levels I'm on about. If you're in Learning Crypto, again, link below. A little bit different. It's more educational, more trading. But you'll know that I've been very interested in two levels. Level one, we're on it. We've pretty much hit it. We've tapped it again. The third retest pretty much. $53,000, $52,000 level. The worst case scenario is probably $43,000. I know you're probably going, oh my God, but it kind of all marries up really when you think about rate cuts and the risk of that potential drop off. But you've also got the run for safety. You've also got, on the 3-day time frame, a bullish divergence with Bitcoin. You've also got the fact that this can't keep going down forever. It will eventually do something and it'll scare you. There's also the fact that it could be in a very, very big flag formation, which is kind of obvious, right? So when we look at that, reality-wise, we are in probably, not financial advice, a better place to buy Bitcoin versus what it was in, say, May, in, say, March, in maybe you could argue probably in August, realistically, right? So fundamentals are key. Buy low, sell high, right? When we look at that, it looks obvious. Now, what I'm more concerned about is the swings and the ferocity of these said swings and where we could be fucking going. Sorry, language. $43,000 is on an extension level, which is making me twitch a little bit, right? Now, I'm not saying that that's the worst case scenario in the world, but we have had an impulse. We've pulled up to the 618 levels, and we've also, on our little way down, we've currently retested on the 3-day time frame the EMA 8. We're also on the 382. This could be the top of this move, right? What could also happen is we're going to probably go and retest the parity zone of where the fib started at roughly $49,000. But that's the extension level. This looks like, in my opinion, if I had billions of dollars, if I was to plonk a load of buy orders as liquidity, that is kind of where you'd want to be. Thinking outside the box here. But where does this add up in terms of time frames, and ultimately, more importantly, how much percentage returns is that in a drop? It's only a 41% correction, which brings me on to a really good tweet by Bob Lucas. So this is a tweet, and I quoted it, and I've talked about this quite a lot. I've talked about a lot of things around overexposure, overconfidence, and unrealistic. My head is on fire with unrealistic expectations, by the way. It really is. So you can see here, Bitcoin did 30% drawdowns often with ease, and we all took it on the chin, and we did. But for some reason, right, and I've alluded to it in other videos, the fear and greed is at 33 right now, and we've only had like a 30%, not even a 30% haircut off the top. I've talked about this before, and I think there is genuinely a lot of panic. It's like, get up, grow up a bit. It's crazy, right? So we're talking about these set for life cycles, and I've talked about it before, like this is the third cycle for me too. And yes, if things go well, I could be pretty cushy, but it doesn't always go well because it's me. But I do think, in my honest opinion, a lot of people got trapped in Bitcoin, and they thought it was a big trap. And other YouTubers have mentioned it, where we're going lower. 12K. Well, as soon as I said 12K there, I absolutely coughed my guts up because I was going to say 8K, and I think my body just went, no, don't say that. But anyways, we move, right? So as I've alluded to, I think a lot of people are and were expecting things, and I myself included had levels lower than what I bought at. And I've often said, I said this on Patreon, like someone asked me on like my MMQs, what was your like worst thing that you've ever done? And I literally said, buying the lows on altcoins on the FTX crash instead of buying Bitcoin. I bought some Bitcoin because it was quite, it's not a bad price. It's a lot higher than when I originally bought, mind. But I should have bought, I should have just bought more Bitcoin, really. So yeah, going back to this massive epic run, trap, and then let's go all in, right? And I think that mindset has caught a lot of people out. A lot of people returned to the market. You probably remember my YouTube blew up again and everything went crazy and things went mad. And it all goes down to this crypto cycle delivery. And why would you kind of be overexposing a market like this when realistically you should have bought a lot earlier, right? It's kind of obvious, I know. But with Bitcoin, I've talked about it. I've talked about Michael Saylor. I've talked about other people. There's some mental expectations here. Mental, right? My last video, I talked about a $49 million Bitcoin. I know. Only because Michael Saylor said it. He actually said it on live TV yesterday, which is absolutely baffling. So I often say to myself, well, what's going to happen here? Well, this is why I want to do the dollar cost average thing as well. I can show you realistic expectations of, well, this is what happens when you dollar cost average in real time with a wallet and of my money. And if it goes to, say, $400,000, you could probably bet I will do a video saying I've sold some of it or sold all of it because it's ridiculous, because I've made money, right? Remember that. Always make money somehow, somewhere. Doesn't matter how you do it. Don't be a dick about it. But ultimately, if you think something's undervalued, buy it. If you think something's overvalued, sell it. If you start taking a screenshot and sending it to your uncle that you're not spoken to for 3 years because he said that Bitcoin was a scam, take profit. That's a really, really good bit of life advice, I think. Now, in last week's video, I talked about these pairs. Now, I want to come back to this. Just wait there a second. Because a total two, in my opinion, we could argue this is loose, I know. We could argue that this and this are a thing called a higher low. For now. It's only the weekly time frame. Chill the fucking... It looks like a tractor. You get the idea, right? So with that regard, are we going to go to the moon? Well, maybe. Going back to what I literally just said, don't look at this just yet. What's happening here? This is really interesting, isn't it, boys and girls? Could be a fake out, though. We're for the first time in a long while above the EMA 8 and also the EMA 21. Granted, we're low. This was the bottom, talked about it. Oh, this is looking interesting. Oh, are we bottoming in? Total 2 / BTC. Not the same. We'll ignore that one. But altcoins have had quite a strong recovery, kind of, versus Bitcoin. And when you kind of marry this up with the fact that BTC dominance having a little bit of a wobbly wobble, it's just stuck. But going back to what Ben said, what if Bitcoin runs and the altcoins get smashed and the likes of Ethereum dies because it's absolute turd and no one cares about it anymore. And the ETFs are bombed and everyone likes Solana and BNB and Polkadot. No, don't. I'm joking. But you get the idea, right? Others / BTC. Is it slowly starting to go, yeah, maybe up? Start going up now? Possibilities are there, right? So that's interesting. But what could happen first is Bitcoin really takes us for a ride. Now, there's absolutely crazy predictions. People are expecting, and I've said it before, Bitcoin to do stupid stuff in Q4. When you think about the election, when you think about rate cuts, when you think about hype and drive and media attention and liquidity returning, you may well find that Bitcoin moves first. And it will drop these dominances because I don't think they'll keep up, personally. I think there'll be too much. When you look at the stable currency side of it as well, this is going up. That going up is usually bad. You want it to go down. It is correcting, and we may well start slowly dropping again. That would indicate that more money, more stables are returning back into the market. That is a huge, huge factor. So that being said, altcoins, watch and shoot, maybe, might be the best analogy to use. I said Ethereum shits, and I know I don't invest in Ethereum. People are like, why don't you invest in it? As I just don't, right? But the reality is here, this is the Ethereum chart. It doesn't look good, bruv, right? It's losing pace, it's really struggling, and it's one of the core factors in terms of why, in my honest opinion, BTC dominance is rising pretty hard. Now, this is interesting. Let's look at the weekly level, going back to it. This is a Fibonacci from the basics of August 2019 to the market moon. 618, we've lost this level. That's bad. Indications of a potential reversal is always on the 786. Not always, I've just said that, but you get the idea. Usually you go a bit deeper if you want to get a reversal. If that is the case, I know, sorry you Ethereum lovers, but I think we may well find we're going to drop a bit lower. Now, a 22% drop from this point, taking us down to 3,200 Satoshis, isn't the worst case scenario. I'm probably going to be the best case scenario. If Bitcoin doesn't do very well, you're probably going to expect Ethereum, in terms of USD price for all you USD people, probably going to go to roughly 2,000 and maybe even lower into the 1,800 levels around here. Ooh. So just be mindful if you are thinking of that. Now, I've said it before, Ethereum, I'll show you because you always want the context. The Ethereum ETFs have done absolute dog turd if you compare it to BTC. But that's overall how it is at the moment. Would I invest in Ethereum if it goes low enough? Possibly yes. Just saying. As much as I say it's poo. The thing with Ethereum is I've changed a lot of things recently, and I feel like the fees have gone so low. It's changed the makeup a little bit. It's like, okay, cool. I prefer Ethereum with expensive fees, basically. Or Solana's done that well and taken so many customers, technically, off them. Things have changed. The pandemic shift has changed. Now, we talk about the Bitcoin flipping in. What's going to flip Bitcoin first? Is it going to be Ethereum? Is it going to be Solana? Or Tether? Probably Tether, to be honest. But we'll see. Now, before I go, let's talk about the S&P 500. Because we have created, I don't want to say it, but a double top. Yeah, kind ish. We've went and retested the EMA 21, or, this moving average 20. You'd probably argue with this bad boy. But we have had some big, strong dips, and we've always pulled back from them. Obviously, we've got data coming. Obviously, we've got the rate cut coming, right? The NASDAQ and stuff like that, yeah, cool. We'll look at that in a second. But so is the VIX has spiked. People looked at that volatility and go, oh my God, divergences, bullish divergences. Alongside now, we've got a regular, no, we haven't, sorry. Words out, start again. Hidden bullish divergence potential here, right? Where trend continuation patterns could happen. If that is the case, and we get a rate cut, as I've alluded to at the start of this video, well, what about if we get a spike up first and then we come down? That could happen. And it feels like this isn't ready to stop. And let me just show you something. I've talked about this before. That looks like a perfect top. Said it on my Patreon. I said it on Loaded Crypto as well. 5,600 basis points. Points. Whatever. On the S&P 500 sounds like a pretty good number. But, what about if we go even higher? What about if we shoot and divert up to this point into a melt up and it gets really interesting to see where we go? So yeah, don't rule anything out. But that could be a top, but we could also spike into it again. So wait and see. The final bit to talk about is obviously the NASDAQ. Now, the NASDAQ, obviously more tech heavy, stimulation of, economic growth with tech stocks and what could be happening in the future could be very, very interesting, right? Obviously, the NASDAQ doesn't look great. If we're looking at the lows, if we're looking at this, 618 level rejection, we could be going into these new lows. Remember the weight of NVIDIA. Remember the weight of some Apple. I wouldn't say some Apple stocks. I'll say the Apple stock with the iPhone 16. Might well drop the market because it's done shit. So we'll see how things go there. But again, look at this. This could bounce. This could really hit this level, go woof. The NASDAQ does do some silly bounces, by the way. So just be mindful. Look at this one. That was crazy. So just be mindful. In my opinion, could well bounce. Could well catch people out. And obviously, NVIDIA's had some little issues with potential subpoenas that could affect the market. So be mindful. And I think that is me done waffling for you. Let me know if you like this video. These are the sort of videos I want to do as and when about topics of interest that need to be talked about. A lot longer, more depth, and yeah, as I say, there's a video probably going to get promoted to you at some point. Watch it.